Hi everyone, welcome back to Be Rich. I have Sashwath with me again, remotely recording from his college. We're here to talk about something of great interest to everybody because all of us use banks and all of us have savings account. And we talk about the way banks are suffering and struggling, but there's an interesting portion to it. Banks, one side, yes, they do suffer and struggle, but they are banks at the end of the day. They have our money and they get to use our money freely and as they see fit. And we, as savings account holders, have to sit the way I'm sitting right now and say, please, please be kind to me. So I thought Shashwat should get into this article and then we can talk further about it. Yeah, Shashwat.
Yeah. So this is how banks work. Banks work by taking deposits from people, and after they collect these deposits, they pool it together and then they start lending it out to different people. So just like how you have savings which you want to put into the bank account, there are equally other people who want to take some money from the bank and say, okay, can you give me some money because I want to invest it in a certain business of mine, or I'd like to buy a property, or there's some other circumstance behind which they need a loan. So what the bank does is from this hand they borrow from you at let's say 3-4%, and on this other hand they give it out for 6-7%. And what the bank takes in about 2%, the differential, as a payment for doing this process and managing your funds. And the nice thing about a bank is that you as an individual could go and lend it out to that person who wants to buy a house, but then you don't know whether that person is going to pay it back. Number two, you won't be able to take back the money. There's no liquidity. So that person is going to pay it back as and when he can pay it back. It's not going to be where you can just ask him for your money back. But a bank says, okay, there are 100 of you are willing to give your money, and there are about 10 of you who want to borrow some money. What the bank will do is it'll take 20% of whatever money it has, keep it in its storage, so that in case one of the 100 people want to come and ask for some money back, they can come ask for their money back. And for your troubles for keeping the money with the bank, they give you a little bit back in terms of savings interest. So this is how a bank works. It's a very neat and actually ingenious system. And most of the people who put their money in banks don't realize how it works. But actually, a bank is acting as a middleman, and this is how the system works. Now, now that we know how a bank works, let's look at how interest rate cycles affect how a bank pays you and how a bank receives payment. So if your interest rates are now, which are being hiked, but before this, the interest rates were 0% in the US. So because interest rates were 0%, the bank could borrow at at a very cheap cost from the Federal Reserve. So they didn't really need to pay you as a depositor much. So they didn't have to compete for your deposit. For them, it was like, okay, you want to give your money to me, then you pay me a little bit, in the sense that you pay me the banking charges. I'm not going to pay you anything because I'm not I'm doing you a favor by keeping your money with me, is what the bank is where the bank stood during the zero interest rate regime, because there was a lot of money flowing around which the bank could take, lend it out and make a nice profit, tidy sum. But what's happened recently, and this was okay, every all your corporate depositors, that is all your companies like the Tatas, like the Birlas, like your Ambanis, who take a money from a company, that is Reliance, takes their money and parks it in a few banks. This is what a corporate depositor is known as. So corporate depositors like Reliance have said, okay, fine, cool, good enough that you are able to borrow at 0%, so I'm not going to ask you to pay me any money for holding my funds. But then what's ended up happening now is that because interest rates are being hiked, the Federal Reserve has hiked it to 5%. So what's that meant is that now banks are in the competition which depositors had before against the central bank and other banks for 0% funds has now diminished. So what corporate depositors have said is they've looked to the competition and they said, wait a minute, there's no competition anymore. You have to pay me a certain amount of money, otherwise I can take my money and go elsewhere where they'll pay me an interest. I can hold it in T-bills, short-term treasury bills, for 4%. Why am I giving you my money when I can give it to the government for a tiny sum? That's what corporates have said, and what Citibank and your BNY and your other banks have said is that, okay, fine, that's fair. So there's a lot of pressure on banks now to be able to have to increase their interest. But So before this, what ended up happening was that when interest rates were at 5% and banks were still paying 0%, that is, they were still playing the fool with their depositors. They were making a tidy sum in terms of their net interest margin, which is the rate at which they're borrowing, the rate at which they're lending. Because you're paying 0%, and now the Federal Reserve has hiked it to 5%, they were charging higher and higher sums on their loans.
Making the arbitrage they were making, the money they were making. Yes,
Yes,
sorry.
yeah, the arbitrage, yeah. So banks were increasing the rate at which they were lending, but the borrowing rate, that is, depositors weren't charging much. They were charging 0%. So banks were happy. This meant windfall gains, which they weren't technically supposed to have. But now depositors have grown smart. They've said, okay, interest rates are persistently high and we need our money for our deposits. And there are many avenues in which I'm getting paid 4 to 5% in some cases for my deposit. So you better pay me, buddy, or I'm going to take my money elsewhere. That's what they said to banks. And now banks are under enormous pressure. So their profit margins are going down. Their net interest margin has come down. It's shrinking. So this has meant profits for these banks have gone down because the arbitrage opportunity isn't as lucrative as it was before. So what do you have to say about that?
I completely agree what you're saying. A lot of people wonder if this is so nasty about banks. If banks are there gouging all these profits out, why do we need banks? A lot of people always wonder if these banks are so terrible and they're making such profits on us and the world economy they can send it teetering like this. Why do we need banks? Why can't we just do away with banks? What you fail to realize is this modern world which we enjoy and we see is completely on the back of banks. If you just because a few bad operators have been there in history and few bad banks have been there, we can't write off the whole thing. We need banks. Banks is what keeps our economy growing, gives access to money, access to credit, which allows people to build things, sell things, grow things, businesses based on banks. So that being said, this is why banks are important. And like what Shashwat said is very true. For a long time, banks could not borrow, would not be borrowing. Let's say the federal rates are very high, then they would be asking for depositors to give by giving depositors incentive because the government rates are too high. They can't borrow from the government. So they used to be borrowing from the general public, encouraging you to deposit vast amounts of your money with them, and they in turn will be lending it out and rotating it and making money. But for a long period of time, since 2007, the rates have been suppressed artificially in the US because of the fallout of the economic crisis of 2007 and then followed by the pandemic crisis. So banks have been getting a lot of free cash from the government, like how investors also been taking free cash from the government and investing it worldwide. Your FII is coming and investing it in here in India. Same way, banks are also getting free cash. So there's no incentive for them to give the savings deposit holders any interest. So that will literally had vanished as an option in the US. The also in interest rate charges, what banks are charging interest because of competition between banks, interest rate collapsing. No bank would want to give up the interest rate because that's lucrative margin for them. They're making a lot of money on the interest rate. So, but
Yes.
another one bank would drop the interest rate, then another bank would have to follow suit and drop the interest rate. So that kept on happening. The same thing is happening in reverse. One bank which is in desperate need of cash and can't afford to go and borrow it from Fed because the interest rate is too high. They're saying let's incentivize people to
Increase it.
come and bring these non-institutional investors to come and drop their money here, their coin here, and we'll give them a little more. So immediately one guy saying, okay, you're going to offer more, I'll offer 0.5% more, 0.5% more, and it's slowly pushing up interest rate, which is good for the consumers because
Yes.
as soon as the Fed raises the interest rate, in tandem banks follow. They do not
Yes.
raise the savings rate in tandem. They're like, okay,
Yeah.
let's wait and see how the market reacts. If you guys demand it, we will give it to you. If you're
Yeah.
not demanding it, we'll make that profit. You know,
Yeah.
we'll sit on this profit because the basic problem in life goes back to what me and Shasha did in our video a few months back about bank, managers. The problem is them being not only in charge of the bank, they're also investors in the bank. They get
Yes.
share options on the bank. So they are also vested interest for them to increase the profitability of the bank, to
Yes.
increase the profit margins of the bank. When they're like that, they of course will keep the savings rate down. They don't want If the guy was not vested or interested in the profit of the bank, he is not doesn't have any motivation for it, then
Yeah.
probably the savings rate would also increase in tandem as soon as, like you see that in State Bank of India, in India, as soon as RBI raises the rate and the lending rate goes up, you'll immediately see deposit rates also following suit. Immediately it
Yes.
falls on in tandem. It doesn't like, sit and wait. State Bank of India is not sitting and waiting and saying, okay, let's see if you guys are going to come and demand that I give you a higher rate. But in the US, because it's a free market, it's a capital market, banks can wait. There's no registration. The Fed does not tell the bank, you must do this, you must do that. They're saying, this is our rate, we are raising it, and they're done with it. Then
Yeah.
individually, each bank has to decide. So, yes, it is sad for news for the investors in the banking sector. It is sad news for bank investors and bank owners. But I think overall, it's good for the consumers across the board in the US. So even small savings accounts now can expect better returns of leaving their money parked in banks, which is a good
Yes.
thing. I don't think it's a bad thing.
And interestingly enough, what I was thinking was that you markets do tend to overreact to information like this. So if there was a downtick in the price of these banks in the US, and if they do correct further, and you see a large decline in the price of banks, as the price of banking stocks, especially after their profits decline, I think it's definitely an opportunity for people to get in on the entire industry as a whole, because some of these banks were pretty pricey before. But I think it
True.
gives you a good opportunity for you to be able to pick up some of these stocks, especially the ones which really get battered, for a nice good profit. And I'm pretty sure now that they can now that they're a bit cheaper, you can consider adding them to your portfolio in the US at least. India
Absolutely,
is a
sir.
completely different story, but the US
India
I
is
think
very different.
definitely,
Yeah.
yeah, the
US
US you
American
definitely
banks
have an
are, yes,
opportunity.
there should be an opportunity to buy them. It is an opportunity to buy because Mr. Marketers always reacts irrationally to these headwinds.
Yeah.
There is really no need to sell them. It's not like they're losing money or the bank has become
Yeah.
unprofitable or the
Yes.
bank is in any danger of collapsing or disappearing because of this. It's just that banks will immediately adjust their lending costs too. Because
Exactly.
if they have to raise their saving cost, they want their margins to be maintained. So they'll immediately raise up the interest cost in the loan. So they'll reach a new equilibrium where they'll still make profits, and profits are there to be made because there's
And
enough, like Warren Buffett said in his video, there are enough corporates also who are desperately in need of cash.
yes.
So, the market situation is such that, and banks can offer them the same kind of funds to these corporates at very hefty interest rates right now. So, banks have opportunities to make money too. It's not all sad stories for the bank.
And in fact, I'd even argue that the banking sector may be something to look at, because now that you have a positive real rate, because now that your interest rate has now increased, banks now have a greater room to make a real profit. So this is something which definitely you can keep your eyes peeled towards. And a nice reading, which is related to what my uncle talked about with the necessity of a bank. It's Ben S. Bernanke, the guy who won the Nobel Prize, Nobel Memorial Prize in economics in, I think, 2020 or 2020. I'm not sure which year, but he won it
Yes.
because of his work on banking. And there's a nice piece on the website, the Nobel website, where they talk about his work, and he has a nice summary of his paper. So if you guys are interested in knowing more about what the importance of a bank is, then I'd suggest that you definitely go take a look at it. It's a nice paper.
Correct. And banks work the best when they are allowed to work freely as they see fit, and competition is maintained with all banks equally. In India, the problem is because it's a lot of government-owned banks are there, it's very lopsided. I'm sure people argue saying it is better to have government control and government regulations. Yes. Yes, you need government regulations on top to make sure banks are functioning correctly. But you're better off to have banks individually operate in a private market and it to be freely in an open competition. I don't think SBI and all these other banks are very healthy right now in India, if you look at it
Yes.
overall. And the problem is because of cronyism, they're forced into lending and leveraging
To
in very
players who
bad
do,
and junk
yeah.
companies because of influence being flexed on them. I'm sure
True.
these banks would be far more profitable and these managers be far more, astute and far more careful in their lending practices if there
Yes.
were hands not on them all the time, pushing them
And
into
you know,
directions.
it's a shame because SBI, it's one of the companies which people come to me and talk to me about saying, "Oh, SBI is a great company." I agree. It's primed to be one of, if not one of the best performers, only because of its sheer size. And the sad thing is it's the way the structure is the Indian economy and the way it's being treated and the way it's being made to operate and having no freedom, as you said, it ends up being one of the underperformers compared to your larger bank, your other private sector banks, and it's quite a shame because I'd love to invest in a company which is your public sector company which is doing good and stuff, but doesn't work out, doesn't pan out as you want it to.
Exactly. And the problem in investing in any government owned or government majority businesses is that because you're in the hands of the government. It's like investing in
Yes,
the government of India. I mean, I invest in
and
the
it
people
doesn't
of
matter
India.
which government.
Yeah,
And just
yeah,
for the record, doesn't matter which government.
yeah. It was the Congress
Government
government which
intervention.
grabbed. Yeah,
Yeah,
Congress government is Indira Gandhi was the one who grabbed it from
yeah,
private sector and made it into a
yeah,
public sector. So I'm not saying this government or that
yeah.
government. If you look at
So
the
we're
history
not.
of Indian
Yeah,
banking and you look at what's been happening, it's
yeah,
just very sad. It's not
yes,
government. It's just populism which did all this. Politicians
yeah,
needed to blame somebody at that time for some problems. They picked on the biggest corporates and the biggest banks they could at the time and labeled them and painted them and said if we
yes,
take it away from these guys, our problems are solved. And
yes,
fast forward 50, 70 years, our problems are still persistent and we're
yeah.
still struggling with these things.
So no
So
cabinet
anyway,
has been able to do justice to these banks, and it's not just
correct.
one government or this or that. Yeah,
Yeah. Very funnily enough, we say these things in all our videos, Shashwat, but for some reason we're always painted by either side as the other person. And this
yeah,
is what I find very peculiar. I wonder if people actually watch our videos in full length and they
yeah.
digest all of the information we say, or they're busy fast forwarding through our videos and they hear bits and pieces and they're like, you know, he said
That's it.
this about my guy. Oh, he
Yeah.
said this about the other guy.
The objective
Anyway,
of this channel is to be as factual as possible while also,
yes,
giving you guys our opinions on what's happening in current affairs and what it means for you as investors. And this video especially is about the banking sector in the US. And a lot of you have written to me on LinkedIn and on the YouTube comments and in person and asked me to make videos on US stocks. So maybe I'll bring up a few banks from the US for further videos with you.
correct. And the way you analyze American banks is slightly different from the way we look at Indian banks. Indian banks, we look
Yes.
price to book. American banks, we look at it slightly different. Shashat and can talk further about that in another video on the metrics he uses to look at a bank or a financial institution in the US. So that may help you guys if you're planning to invest in the financial institutions in the US.
Yeah.
Anything else you want to add, Shashat?
Nope, that's about it.
Okay. Thank you again for joining us today on Be Rich. And thank you, Shashas, for taking some time out to talk to us.
Thank
If you
you.
do like this video, please turn on the bell notification, and subscribe to our channel so you'll be notified every time we come up with some new content for you guys. That being said, thank you again for joining us today on Be Rich.
Thank you.
I am in Tokyo on work on the 5th of August 2023. I have a lot of following in Japan, Tokyo. Those who want to meet me in Tokyo on 5th August, kindly drop me an email on the address given below or contact us on WhatsApp there. My team would get in touch with you and facilitate the meeting. Once again, I thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.